Hello, ladies and gentlemen. Marty Erico, TradersAudio.com, and the Energy Pits. We're talking recap for today. Today's pit session for March 6, 2013. Let's start it on off by looking at our pit session high and low. For the crude, I had a high up at 90.72, a low down at 89.55, and we closed and settled the day quite near high prints and just below daily pivot at 90.42. Today we've seen a little bit of an increased activity to the downside after seeing inventory numbers come out with actually a higher than expected build in inventories of 3.8 million opposed to the API numbers that were, there we go, it's fucked. Hello? All right, hello, ladies and gentlemen, Marty Erico, TradersAudio.com, Energy Pits. We're talking market recap for Energy Complex today, March 6, 2013. Alrighty, guys, let's look at crude oil here. Levels first and foremost. We had a high up at 90.72, a low down at 89.55, and we closed and settled the day at 90.42. That's kind of just right in the middle of a range, just below daily pivot and pit session open price. So today we had crude actually start to trade a little bit lower on the day due to a larger build in inventories than what was expected. Again, we saw similar activity in the API numbers giving us that leading indication today, as we did have a 3.8 million barrel build on the crude side of things. Looking at the RBOB and heating oil side of the spectrum here, we had a draw of 116,000 barrels on the RBOB, which is gasoline, and on the heating oil distillates, we saw a draw of 3.83 million barrels. So again, we're watching here just a divergent type trade to actually the downside, as even though we got a draw in the gasoline, it didn't live up to expectations, so we did see it trade a little bit lower. Really no big breaking news hits the pit today, as we really just saw prices trade in reaction to inventory numbers and then kind of bounce off some support at the 89.5 level. We had speculation of just some traders talking about a new trading range developing here, possibly between 88 and 92. So again, we yet to make it up to 92 this week. We still trade within the 90.5 level, and we're going to have to keep an eye as volatility really kind of decreases back down to historical lows on the implied volatility side of things. So we're really not getting that follow-through conviction that we need associated with high volatility. If we could just shift our attention here to natural gas real quickly here. Natural gas had a decent trading range and now is trading below the 3.5 level here. We're talking natural gas trading below 3.5 for today's close and settle, I should say here. We had a high up at 35.40, a low down at 34.62, and we closed and settled the day quite near those lows at 34.73. Once again, as we got below that 350 level, we really didn't look back, and we traded actually really down to some new lows for the week, if you will. So we're going to see a continuation of this bearish-like pattern, as we don't have really any crazy weather forecast giving us any type of catalyst to trade higher. And we're continuing to watch a little bit of a downside activity here in the natural gas. We have a lot of put buying at the 350s down into the 345s. With decent volatility in the natural gas, we really haven't seen much movement to the upside or crazy weather reports. So again, we're going to have to watch crude, volatility, new trading range, and obviously news out in the market. With natural gas having its inventory tomorrow, that's really going to be the only variable that we're going to have to be watching for the market. Again, this is Marty Erico, TradersAudio.com, Energy Pits.